Now, Solana's endgame is to be a decentralized competitor to centralized stock exchanges like the Nasdaq. In a recent interview, Anatoly noted that this is still the endgame of the project, but also noted that its purpose has broadened to include other use cases, namely DeFi, NFTs, and crypto payments. As a fun fact, by the way, Solana is apparently the official blockchain for Circle's USDC. This was according to a blog post by the Center Consortium, an entity which consisted of Coinbase and Circle and governed USDC. The caveat is that the Center Consortium was dissolved in August, and it's not clear if this is still the case. Anyhow, Solana's mainnet launched in March 2020. It uses a proof-of-stake blockchain with a 400 millisecond block time, which timestamps transactions using a technology called proof of history. This makes it possible for Solana to theoretically process up to 710,000 transactions per second, but its current TPS is between 2 and 3,000. In theory, Solana is quite decentralized, as it's secured by almost 2,000 validators. In reality, however, Solana transactions are processed by clusters of up to 150 validators. More importantly, Solana's full transaction history is stored on Google Bigtable. Some would argue that this makes Solana more centralized than meets the eye. It's important to note, though, that this is the case for most crypto projects. The difference in Solana's case is that its blockchain is infamous for experiencing frequent outages. Now, the reasons for these outages vary, but they fundamentally boil down to the fact that Solana prioritized speed above all else. Even so, it's important to note that there have been no outages since February. In terms of tokenomics, meanwhile, Sol is used for staking and to pay for transaction fees on Solana. 50% of these fees are burned. Sol staking rewards are currently around 7% for validators and delegators, with a 5-day lockup and slashing enabled. 7% is roughly Sol's inflation rate too, which will decline to 1.5% by 2030. Sol's initial supply was 500 million, with roughly 37% being allocated to early investors, 25% to the team and foundation, and the remaining 38% to the community reserve, managed by the foundation. Solana raised around $25 million between 2018 and 2020 and raised an additional $314 million in 2021. Two of the largest investors in Solana and Solana's ecosystem were FTX and Alameda Research. They held between 10 and 15% of Sol's supply when they collapsed last November. Concerns about both entities selling their Sol as part of the bankruptcy process is why many, including us, were concerned about Solana. Solana was also FTX's de facto exchange chain, which led to concerns that the project could have been involved in FTX and Alameda's dealings. Thankfully, though, this turned out not to be the case. Now, the result of all these updates is what you see here. Very volatile price action for Sol, more recently to the upside. It's possible that a part of the recent rally was due to short liquidations, but the primary factor is likely the one we mentioned a few moments ago, the SBF situation being sorted out. So, this begs the question of where Sol is headed next. Well, the answer, as always, depends on two fundamental factors: supply and demand. Some of you might recall that the supply side of Sol is a bit fuzzy. The entirety of its initial supply of 500 million was supposed to vest, aka unlock, in January 2021. Apparently it didn't, and we still haven't been able to find an updated vesting schedule for Sol. What we did find, however, was the vesting schedule for the Sol that was sold to FTX and Alameda Research. This was detailed in a blog post by the Solana Foundation in November. We'll leave a link to it in the description. The TLDR is that most of the Sol sold to FTX and Alameda will vest monthly until late 2027 and early 2028. By most of the Sol, I mean roughly 45 million. This works out to around 500,000 SOL unlocked each month, which FTX and Alameda will likely have to sell as part of their bankruptcy process. 3 things to note here. The first is that FTX and Alameda can and have been staking this vesting SOL, meaning that the sell pressure could be higher. The second thing to note is that even with this additional sell pressure, though, it still works out to only around $25 million of sell pressure per month. Now, this sounds like a lot, but Sol actually issues over $25 million of staking rewards every week. And this pertains to the third thing to note, and that's that it's unlikely that all of FTX and Alameda's Sol will be sold on the open market. Given the institutional interest, most sales will likely take place over the counter. But that's just the supply side of the equation. What's fascinating is that the demand side statistics don't look as strong as you might expect. For starters, the Phantom Wallet browser extension still only has 2 million downloads. This is basically the same number of downloads it had last year. As hinted earlier, the total value locked on Solana is still in the toilet. To be fair, it's risen slightly over the last few months, but it barely registers on the long-term chart. This might have something to do with the fact that most of Solana's activity appears to have migrated to its NFT marketplaces. According to data from DappRadar, there are around 1 million unique wallets using Solana's NFT marketplaces every month. This is roughly double the number of unique wallets that were interacting with Solana dApps 1 year ago, which was impressive back then, given the circumstances. SolScan's analytics tell a slightly different story, however. As you can hopefully see, the number of active wallets on Solana is still extremely low. With the exception of the recent spike, these analytics suggest that the number of active wallets is actually half of what it was after FTX collapsed. But, as we've seen, the fundamentals don't matter when the FOMO kicks in, and it's safe to say that the FOMO around Solana is a former MMA champion. In all seriousness, the extremely bullish sentiment around Solana could be a contrarian indicator. It could foreshadow a much-needed correction for Sol. This is consistent with what we see on Sol's price chart. No matter which indicator you use, it's clear that Sol is very overbought. The RSI being over 90 and Sol's price being outside the Bollinger Bands on the weekly are 2 of many signs that Sol is primed for a pullback. Note that weekly RSI divergence as well. If we zoom out to the monthly though, we can see that Sol has broken above the Bollinger Band moving average, bull market territory. It's likely that Sol will bounce around this moving average until after the Bitcoin halving, when alts finally take off. Note that a correction to the moving average will be a 40% drop. In the long term, it's possible that Solana is following Ethereum, but 1 cycle behind. Ethereum hit a market cap of over 500 billion during the last cycle. If Solana follows suit this time around, it would translate to a price of around $1,200 per Sol, a 20x move from its current price.
Solana's technical upgrades, including the introduction of a new validator client called FireDancer, demonstrate a commitment to enhancing scalability and speed as the project evolves. Keeping an eye on these technical milestones will be crucial in assessing its competitive edge. In the ever-evolving blockchain landscape, market dynamics and the interplay of supply and demand are pivotal factors in determining Solana's future price movements. The intricacies of tokenomics, including staking rewards, inflation rates, and the unlocking of early investor tokens add layers of complexity to the equation. Understanding these dynamics is essential for making informed investment decisions. The Solana community's resilience and enthusiasm have been noteworthy throughout the project's journey. Engaging with the community, understanding their perspectives, and monitoring sentiment can provide valuable insights into how the narrative around Solana is evolving. As we navigate the twists and turns of the crypto landscape, Solana continues to be a captivating protagonist in this unfolding story. Remember, the crypto journey is a collective adventure, and your insights and perspectives contribute to the narrative. If you found value in the content, hit the like button, as that helps us reach more viewers like you. If you're not subscribed, hit the subscribe button as we put out daily content to keep you updated. Thanks for watching, and we'll see you in the next one.